How's it going, everyone? This is Nick from Reventure Consulting, and I am back here with another Reventure YouTube cast. I am super excited about today's episode because I'm going to be sharing some exclusive deep data on the Los Angeles real estate market with you guys today. And I'm really excited to do this one because I've been getting lots and lots of requests from you guys on Los Angeles. So if you're an LA home buyer, if you're an LA real estate investor, this will be a great video for you to watch because we're going to look and see what the data has to say. Deep data from Zillow, the US Census Bureau, the Bureau of Labor Statistics. We're going to look at what the data has to say and answer two key questions. The first is now the right time to buy real estate in Los Angeles? Are values going to continue to go up in the future, in which case you should buy now, or are values heading for a crash, in which case you should definitely wait? The second thing we're going to ask is, what are the best locations to buy in LA? After all, Los Angeles is massive. The metro area has 13 million people, so many different little cities and neighborhoods, so much differentiation in the market. So we need to apply the same type of data to the zip code and neighborhood level to say, what are the best areas to buy? Which areas are going to have the best future growth potential? Before we get started, I'd just like to ask, if you guys enjoy this content, please make sure to hit subscribe down below. Make sure to also like and comment on the video. I love providing this content to you guys. It makes it easier for me to do that if you can engage with the video. So please subscribe, like, and comment on the video. All right, without further ado, let's get into it. So the first thing we need to talk about when we're talking about Los Angeles real estate is the price, the cost of real estate in LA, and it is quite simply absurd. Los Angeles is the third most expensive real estate market in the US. According to Zillow, the typical price of a home across the LA metro, which includes Los Angeles County and Orange County, the typical price of a home is $760,000 in February 2021. That is the third highest in the US, second to only San Jose and San Francisco, which are number 1 and 2. So when we're dealing with a real estate market that's this expensive, that creates problems for a lot of people. Unless you're rich, right? Unless you're making lots and lots of money, potentially hundreds of thousands of millions of dollars a year, buying real estate in LA is going to be a huge financial decision for you, right? To get something that's not even that big or that nice, it's going to cost a lot of money. So we really need to answer the question, is $762,000 a fair price for the typical home in LA? Or is it overpriced? Is LA experiencing a real estate bubble that is about to crash? So to answer that question, we really need to establish context. How expensive is LA today compared to, let's just say, the average market in the US? And how much have prices gone up in LA in recent years and also over the last 5, 10, and 20 years? And this graph answers both of those questions. So the blue line is Los Angeles, and it represents the typical home price in LA. So you can see in February 2021, the typical price of a home, that's the standard home right in the middle in the market, is $762,000. That compares to a US average of $272,000. So in early 2021, LA costs roughly 3 times as much to buy a home or an investment property as it does elsewhere in the US. Now, if we go back in time, we can see that it wasn't always this exaggerated, the LA price differential from the US average. Back in 2001, the typical price of a home in LA was only $264,000. 3 times less than it is today. So basically, in the last 20 years, LA's typical home price has appreciated by 3x, from $264,000 to $262,000. That's great for existing owners in LA. If you owned a piece of real estate back in the early 2000s in LA and you held it, you've done really well. You can see that the increase in the US home price is much more moderate. It's roughly doubled from $136,000 to $272,000. So we have LA experiencing a lot more appreciation over the last 20 years than the US average. The other thing to note about this graph is you can see that LA has had a bit of a volatile past in terms of real estate. Values shot up in the mid-2000s all the way up to about $640,000 in August 2006. And then you can see that values cratered over the next 4 or 5 years, all the way down to less than $400,000 in 2012. So for a good 5 years from 07 to 2012, LA's real estate market stunk. A lot of people got burned who bought around 2005, 2006. A lot of people lost money. And the central question is, even though LA has rebounded significantly, back up to 762, are we going to see another crash in LA over the next couple of years? So if you're buying a home or an investment property in LA, this is something you really got to think about and consider, right? Prices in LA today are 3 times the US average. They were 2 times the US average 20 years ago. So LA real estate has gotten a lot more expensive compared to the rest of the US. Additionally, at a typical price of $760, that's the 3rd highest in the US, and that's roughly over 10 times higher than what the median income is, 10 times higher than what people earn in Los Angeles. Those facts make the current price situation pretty shaky, right? If you look back historically, one of the best indicators of a future real estate crash is just how much prices have gone up in recent history. If prices have gone up a lot over the previous 5 to 10 years, which they have in LA, and if prices are at a really high multiple compared to what people make, that means that there could be a real estate crash around the corner. Now, I'm not saying it's definitely going to happen, but it could happen. The other thing that concerns me about Los Angeles are the underlying fundamentals in the economy. So if you've been watching my channel over the last couple of months, you know I talk a lot about jobs, right? Looking at job growth. And job growth is super important for real estate demand and prices. Because if you're adding jobs in the local economy, those are people who need a place to live, whether it be an apartment or a home that they buy. So if your economy is adding jobs and adding a lot of jobs, that's going to be really good for the local real estate market. That's going to increase demand. That's going to increase prices. However, LA, just the opposite has been occurring. There's actually been long-term economic stagnation. LA's job count in early 2021, the amount of jobs across the metro area, is actually less than it was 20 years ago. So LA has actually seen a decline in jobs over the last 20 years. So you have to ask yourself, LA has actually seen a decline in jobs, yet prices have nearly tripled over the last 2 decades. Is that something that I want to get involved in right now if I'm a home buyer or real estate investor? And you can see what I'm talking about on this graph. So we're comparing 2 cities, LA in blue to Dallas in green, and we're looking at the job growth that's occurred in each market over the last 20 years, from 2001 to 2021. And we're looking at the percentage increase in jobs. This data comes from the Bureau of Labor Statistics. Now, if we go from around 2001 to the mid-2000s, you could see that LA and Dallas are pretty similar. They both lost jobs in the early 2000s. They regained them around 06, 07, pretty similar. But since then, the green line, Dallas, has really separated itself from the blue line, LA, right? You basically just see the gap between these 2 lines getting wider and wider. And what that means is that Dallas is creating more and more jobs, and LA's job growth is stagnating. Up until basically now, through early 2021, Dallas has shown a 31% increase in its job count. It's added almost 900,000 jobs to its economy over the last 20 years. LA, as you can see here, LA has actually seen a decline in jobs over the last 2 decades. Jobs have declined by 1.4%. There were 77 less thousand jobs in early 2021 in LA than they were in 2001. And just the difference between these 2 markets is massive. Just look at the gap between these lines. And the reason I'm harping on this so much is from what I said before. Job growth and economic growth, that's your number 1 determining factor of future real estate appreciation over the long run. A market like Dallas has tons and tons of job growth, really strong fundamentals for its economy. LA is basically experiencing economic stagnation over the last 2 decades. That is not good for its real estate market. So when you combine high prices, which LA has, rapidly escalating prices, which LA has, and then poor economic fundamentals, which LA also has, that is a recipe for some turbulence in the housing market. That likely means that values in LA are probably a little too high compared to what they should be. So I think my broader recommendation would be, just if you're really caring about appreciation and growth for your home or your investment property, now is probably not the best time to buy in LA. I would wait. Now, of course, if you're looking to buy a home because, you just want a place to live, you want a nice place to live, go ahead and do it. That's why people should buy homes. But from strictly an appreciation perspective, I suspect the smarter thing to do in LA would be to wait. Now, the other thing we need to add to this is the location within LA, because not all areas within Los Angeles are created equal. And when you start looking at a market where the broader macro fundamentals might not be so great, as is the case in LA, you got to pay a lot more attention to the micro, to the neighborhoods and the zip codes that you're looking at. The things going on at the local level, at the neighborhood and zip code level, are going to matter a lot more when your overall market is struggling. So if you're a home buyer investor in LA, you also need to pay attention to things like, how much are home prices in my neighborhood and zip code? How much are those prices relative to what people earn in my zip code? Do I think that my neighborhood and zip code are going to continue appreciating, or is it a relatively poor investment relative to the fundamentals in my area? And the best place to get started in terms of understanding the local areas within LA is to look at where the appreciation has been over the last 5 years. And that's what this map does. The greener shaded the zip code looks, the more appreciation there's been. The more translucent or blue the zip code looks, the worse the appreciation. And so the first thing that sticks out is that the majority of the appreciation in LA is in this cluster here. That's where you see the green. So that's kind of the center of urban Los Angeles. That's Hollywood, West Hollywood, Beverly Hills, Santa Monica. That's where most of the appreciation has been. If we go southeast into Orange County, Huntington Beach, Irvine, Mission Viejo, areas like this, there's been much worse appreciation there. There has not been as much real estate growth over the last 5 years. So it's just really important to establish this context up front. Now, if we zoom in to LA's strongest appreciating areas, we can see some crazy things going on. So for instance, now we have 90004. This is in Wilshire in LA. The typical home price has almost doubled from $784,000 to over $1.4 million in the last 5 years. That is crazy growth and appreciation, a near doubling in just 5 years in the typical home price in 90004. If we kind of go west, we see Beverly Hills, 90212. Typical price in 2016 was $1.5 million. That price now is almost $3 million in 2021, a near doubling in price. 90210. I'm sure you guys know this zip code. Beverly Hills 90210. Typical price $3.4 million in 2016, $5.4 million in 2021. So 90210 has seen over $2 million increase in the price of a home over the last 5 years. We head to Santa Monica 90402. Typical price $2.6 million in 2016, up to $4.3 million in 2021. So interestingly, in LA, the most expensive, the nicest zip codes, the ones with the most money, those are the ones that have seen the biggest increases in prices in the last 5 years. Wilshire, Santa Monica, Beverly Hills have seen the most appreciation. And the reason I'm focusing on that is that's actually very strange. If you've watched some of my other videos on my market deep dives, I've gone into Phoenix, Austin, Dallas, Atlanta, Houston, you'll see that it's almost always the exact opposite. Usually it's the poorest zip codes, the most lowest price zip codes that see the most growth. But LA is flipped. It's the nicest zip codes that have seen the most growth. And what's interesting in LA is that LA, more than any other city in the US, has expensive real estate relative to how much people make, right? And so it's people's incomes. It's how much money people earn, which ultimately determines in the local area how much real estate prices are going to be, right? And this makes sense because when you go to a bank to get a loan to buy a home, your income level is like the primary determining factor of what the kind of loan the bank will give you, and that's going to affect the price that you pay. So in Los Angeles, values are just way higher than incomes in certain neighborhoods. So here we are back looking at the LA map, but except now the zip codes are shaded by the value to income ratio. So that's taking the typical home price in early 2021 in the zip code, dividing it by the median household income based off census data from 2019. And the more orange the zip code looks, the more higher values are relative to incomes. So let's just zoom in here and let's just go back to 90210. So the typical home price in that zip code is 5.4 million, but the median income is 150,000. Now 150,000 is high, but it's not really high enough, at least to substantiate 5.4 million. So you can see 5.4 million is 37 times what the median household income is. And basically all of these zip codes here in central urban LA have a similar story. 23 times income, 29 times income, 22 times income, 20 times income, 21 times income. Really high values relative to how much money people are making, which means that these valuations are being pushed by leverage in debt, right? If people don't have incomes to support a $2 to $3 million home price, well, someone is having to bridge the gap, and that's likely the bank that's doing that. Now, if we zoom out, these areas in green to the east have much more reasonable value to income ratios. 90631 La Habra, 8.4 value to income. Norwalk, 90650, 7.9 value to income. Lakewood, 6.9 value to income. Carson, 7.6 value to income. So there's really like two different LA real estate markets. There's urban central LA where prices are really high relative to incomes. And then there's kind of just to the east and to the north where all this green is, where prices are more reasonable relative to incomes. To give some national perspective on this, this graph takes a look at all of the zip codes in the US, every single one, and looks at the ones with the highest price to income ratios. And all of the orange bars are LA zip codes. And you can see that the top of this list is dominated by LA. You have a San Jose here, a San Francisco there, a New York there, but everything else is LA. 90210, second highest value to income ratio in the country. 90212, fourth highest. 90211, fifth highest. So LA just has all of these zip codes where values are really high relative to what people make. If we scroll down this list, it is just dominated with orange. So in summary, if you're looking to buy a home or investment property in LA and you don't have an urgent need to do that, it's not like, you're having a kid and you need a bigger house, I think it's probably wise to wait because prices right now in LA are super high relative to the rest of the US. They're super high to how much money people make across the metro area. It's probably better to wait things out, maybe rent for another year and see what happens. If you do have to buy, right? Like if you urgently need to buy, whether it's a house or investment property, try to stay away from the areas in the neighborhoods and zip codes where prices are 15, 20, 25 times higher than what people earn in the zip code, because those areas are going to have a lot more downside risk when the next housing crash comes. Instead, you want to target areas where the price to income ratio is much closer, and you also want to target zip codes that are experiencing growth in incomes, growth in the amount of college educated people in these zip codes, reductions in poverty. Those are the type of things that you want to see in your real estate neighborhood and location. If you guys want help doing that, if you're looking to buy a home or an investment property in LA and you want more information about when and where to do it, please reach out to me. This is what I do for a living. Go to www.reventureconsulting.com, submit a contact form, and leave information about what your interest is in real estate. I can help you use data to find the best locations for value security and future growth potential. Additionally, I just started an Instagram account. It is at reventure_consulting. And on that Instagram account, I post data and videos every single day on different real estate and economic topics around the country. So if you're liking this content, make sure to follow me on Instagram at reventure_consulting. All right, it was great talking to you guys today. I hope you enjoyed the video. Until next time, this is Nick signing off.